AIM-listed Altus Strategies is an Africa-focused mining royalty company generating a diversified and precious metal-focused portfolio of assets. One of the founders and the chief executive is Steven Poulton. He joins us now from Oxford. Steve, it's good to catch up with you. It's always interesting to talk about these royalty companies. Explain, first of all, how a royalty company works in the interest of investors.
Thank you, Jeremy. It's a pleasure to do that. A royalty company is a business which owns the rights to the cash flows from a project or a mine. And the benefit of being a royalty holder is that you don't have exposure to the risks of the mining operation or the risks to the profitability. The benefit of being a shareholder of a royalty company is that you have exposure to numerous royalties, and therefore your own risk is diversified across a portfolio of mining operations or projects. So in terms of, from an investor standpoint, it's a very good way to have exposure to rising commodity prices and the production out of projects without actually having to take the risk of owning the projects.
But my understanding is that you are slightly differentiated from what one might regard as a pure royalty company, because my research suggests that you have your own discoveries as well as buying into third-party mines. Is that correct?
Absolutely, yeah, that's right. We think we cover the two sweet spots of the mining sector by, in the one hand, owning or seeking to own royalties, and in the other hand, actually getting involved with the exploration and discovery of projects. And your viewers will know that if an exploration business in the mining sector, as well, obviously in oil and gas, if it has a discovery, then it can have a fantastic effect on the share price through the value that's created from that. And in Altus, what we've been doing for the past 15 years, really almost, is assembling a portfolio of projects and acting as a hybrid between your traditional exploration business and your traditional royalty company, so that we can capture those two end members, basically, so we can have the exposure to the discovery and we can also have exposure to the royalty. It's not a straightforward business necessarily to manage. It requires certain skills and expertise, and we think we've got a fantastic team here at Altus that have been executing this model for a number of years now, very successfully.
And my understanding is this model specifically has actually brought on one specific institutional shareholder, which I imagine has been a really a big sort of cornerstone investment opportunity. What happened there to bring them on? Who is it, and what do they provide for you?
That's right. Last year, in February of last year, we closed a transaction with Mancha Holdings. Mancha is a family office investment company which is well regarded, incredibly well regarded in the mining space, and specifically within the African mining scene. They have a couple of strategic investments in much larger gold mining groups. The first one is Endeavour Mining, and the second one is Golden Star Resources. Those are two Canadian-listed mining companies focused on Africa, and the shareholdings that Mancha has in those two groups are very material, a quantum of what they've invested into Altus. We are effectively their third investment. And the reason that Mancha invested into Altus is primarily to gain exposure to those two sweet spots I just mentioned, which is the discovery side and also the royalty side, and having that diversification across a portfolio of assets in Africa. So there's a real dovetailing between the strategy that Mancha is looking to fulfill and the one that Altus is executing. And since that time, obviously, we've had the disruption of COVID and market volatility between then and now. But really, some market participants are better understanding Altus and the direction of travel. They realize that the Mancha Group are very serious investors. Their track record of making strategic investments into companies and then those companies performing is excellent. And therefore, they are understanding that Mancha would not have made the investment into Altus lightly. In fact, their CEO has joined our board of directors and is providing fantastic support and coming up with great ideas about how the company can move forward. And that is starting to seep into the market. The share price of Altus has done particularly well in the last year. Some of that really is basically a reevaluation of the company. We've obviously got a fantastic portfolio of assets, but we were a little bit under the radar for a number of years. And now the Mancha transaction has really brought that to the fore, and people are looking a little bit below the surface and trying to see what the future holds for us.
Yes, I mean, you mentioned Africa. Why Africa particularly? You are a geologist, and doubtless during your academic years, you were interested in various other areas around the world, because Africa is not just the only area to focus in on. But this is the main focus of your attention at the moment. Why? What is it you like about Africa particularly?
It's a very valid question, and it's quite straightforward to answer, really, in two ways. One, Africa is highly prospective for different types of mineral deposits. Everyone obviously is aware of the gold endowment in different parts of Africa, but all sorts of other metals and commodities are there. And the second part of it is considering the scale of the continent into which you could fit so many other of the Earth's land masses. It's actually very underexplored, and therefore you have this fantastic combination of high prospectivity and limited exploration, and that allows you to make discoveries much quicker than you could if it was in another part of the world. And that speed of discovery is really what Altus is playing to. It means that we can spend less money and less time and get more value created per share for our shareholders than if we're exploring elsewhere. And in executing our business model, where we make those discoveries, we attract a third party, a joint venture party, to explore the ground, and then we get paid for that process, and we end up with a royalty and an equity interest in the asset. It means that we can move on to the next discovery, and that ability to move from project to project means that we can actually build a very material portfolio of assets and also have diversification. Obviously, there's geopolitical risks everywhere in the world, and Africa's not spared from that. And having a number of assets across different jurisdictions means that our shareholders can sleep sound at night, that they have exposure to the upside without so much of the downside risk they might otherwise suffer.
Yeah, so it's interesting, isn't it, looking at Africa in terms of the political aspect of it. You're in Mali, which does have some political disruption in it. But I'm more interested actually in one of the more recent headlines. We talk a lot about some of the opportunities in Egypt, and you've just struck a deal to move into Egypt. My understanding is one of your neighbours there is Centamin. We talk about Centamin a lot, about gold production. What drew you to this particular deal, which I think was finalised earlier this month, wasn't it?
That's right. We announced that just this month. And Egypt is, I mean, the gold endowment of Egypt is well known globally for all the obvious reasons. And we actually, as a group and as a team, looked at Egypt many years ago, and Centamin has been a fantastic flag bearer and delivered fantastic technical and commercial success at the Sukari mine. It's a world-class deposit. But actually, there's been very few other companies that have gone in there for various other different reasons. But really, it boiled down to the attractiveness and the ability to secure ground and the licensing system. Now, Egypt had a new code implemented, and that has gone in hand with a bid round to allow international groups to apply for exploration licenses. And this is really the first time that this has been done in this way. And Altus participated in that bid round. And obviously our major shareholder being La Mancha, which has very strong affiliations with Egypt, has helped us in that regard. And we're aware of a number of other very large gold mining groups, international gold mining groups, that have also acquired licenses in Egypt, which we are now obviously next door to. And we're very excited about the opportunities that are present in Egypt, and very excited to start our exploration program. So,
my understanding is, I think you're now steered something like 70% of your exposure, I think, is now to gold, which quite clearly, if you're a gold bug, is something which many will be interested to hear more about, I guess, on another platform at another time. But my understanding is, I think you've got 21 projects now under your umbrella. Is that right? Does that include the Centamin one? I mean,
actually, yeah, it's now 24. Yeah.
Oh, it's now 24. There we are, updated breaking news. So what can you tell us about some of the other really big projects that are in the mix at the moment? So I won't draw you into too much detail, but broadly speaking, what do you see as the flag bearers of the assets you hold?
Well, we announced some news from one of our assets in Mali today, the Diba Gold project, where we have a 400,000 ounce gold resource there and a $107 million post-tax NPV on that asset, using a very conservative $1,500 per ounce gold price. We've announced the discovery of a new zone on that property. Looks like a very interesting discovery. We're hopeful that we can expand that resource. The project itself is located in a world-class gold belt with many multi-million ounce gold mines on it. So we're quite confident about that. That's quite exciting. Elsewhere, in Mali, we have a joint venture with an Australian group called Marvel Gold, who are doing an excellent job of advancing two assets, the Tabakoroli asset and the Lakampla asset. Tabakoroli has nearly a 1 million ounce gold resource on it. We expect that to grow, a very good metallurgy. And elsewhere in Mali, we have a joint venture with Resolute Mining on a gold property there. If you step out of Mali, we obviously touched on Egypt just now. Recently, we did a transaction to sell a couple of our assets in exchange for royalty interests and equity in the company to a TSX listed group who are in for our Ivory Coast projects. We are one of the more serious major groups active in Morocco, exploring for copper and silver. And we've got some interesting discoveries up there, which are proximal to existing copper and silver mines. We're active in Ethiopia, in the north of Ethiopia, where we're looking at so-called VMS targets for primarily gold and copper in what is becoming a very interesting belt of discoveries where we know that Newmont Mining are very active. We're also in Cameroon, where we have an interest in a bauxite asset that we discovered, and also a gold property, which we don't talk much about, but there should be news on shortly, we would hope, and an iron asset in the south of that country. So as you can see, very much diversified portfolio, enough to keep us very busy. We expect in this year ahead for us to continue to grow that portfolio with new licenses in those countries, but also in additional countries.
Yeah, you've referenced the share price. I want to bring that share price back up again to remind ourselves as to where we are. I think 140% up from where we were this time last year. You've got a market capitalization of 62 million, spread over 24 projects. That doesn't attribute much to each project on average, I guess, as bigger and smaller projects that you've got. What is priced in at 88.75 pence? Because you're talking here about a lot of, as I say, projects, assets, a lot of interest in various numbers of areas. And of course, you mentioned the fact that it spreads out the risk in doing what you're doing. What do you say to investors when you're talking about 88 pence a share in a company that has this sort of interest across so many different regions?
Yeah, we also have some cash and listed paper on the books on the balance sheet as well. So we have about just over £7 million of cash and investments as well, which you can take straight off the top of the market cap. So the question you're asking, I guess, is how is the value distributed, and is the actual value potentially higher? The Mali asset alone, the Debra asset alone, I would say underscores the current market cap of the company. So if you were to take that as a premise, and we expect that asset to grow, then effectively the belief of the management team here is that the rest of the assets in our portfolio are effectively for free. And that creates what we believe is a fantastic opportunity for investors to get in at a lower price than we might be in the future. Now, who knows quite what will happen in the year ahead. So obviously last year was somewhat different. But we're very confident that not only will we continue to expand the portfolio, we're going to realize value from our assets through more transactions. And it's that process of realizing and monetizing our projects which helps the market not just understand the value of those assets, but also the inherent positive sort of feedback loop that is generated from our business model. We've also, one of the things we haven't touched on, which we should, is the fact that Altus is also in the business of looking for royalty opportunities that may be more advanced. And this is one thing that perhaps the La Mancha investment will assist us with. And by that, I mean, there are existing royalties that have been struck, which are in other groups' hands that they're looking to monetize, that we may look to acquire. And also we have the capacity to potentially provide capital to other companies active in the mining space. And with that provision of capital, also tack on a royalty to the deal. So there's other facets to the business model, but they all dovetail very well together. So that in due course, we'd expect, let's say, our portfolio that's currently 24 assets to maybe move to 30 or 40 projects, and also for our royalty portfolio, which is currently at 9, to double or maybe do more. But to have some of those royalties to be cash generating in addition to the monetization events. And I think at that stage, people will see us more of as an investment vehicle, and a great way for them to have exposure to the mining space in Africa without all of the usual associated risks.
Yeah, I think it's worth mentioning, of course, as chief executive and founder, you would say there's upside potential on the share price, but I mean, that's fair game. I just want to take that apart a little bit if I possibly can, and talk a little bit about what you've got in terms of debt, how you pay for these deals, how you're going to treat investors when you want more money. Do you come back to the market? Do you dilute down? What's your position with regard to all that? Because clearly there is a risk being built into the current share price, what that risk is depending on where investors look, I guess. But what do you see as the future, apart from the fact you want a higher share price? I'm talking a little bit about how you see the structure of the company and the reward to investors in the longer term.
We have no debt on the books. And the good thing about the royalty generation business is that actually it's a fairly low cost activity. And we've got a team of about 15 geologists within the group in Africa and in the UK. And that team is mandated to go and make discoveries. So we stake prospective blocks of land where we expect to make a discovery. We then test whether there's a discovery to be made. And we've had a phenomenal track record, actually, so far in making discoveries. And then the process of moving that discovery to the point where we're looking to do a transaction on it is not necessarily incredibly expensive. So the burn rate of the company from an operations standpoint is relatively low. And then once we get to the stage of monetizing, then we actually receive income upfront, traditionally in a joint venture or even in a sale. We retain an equity interest in those assets. And those various payments that we receive, and in some cases we sell equity in the companies that we own, that generates a fantastic cash flow, which goes directly back into financing operations, which means that our actual burn rate is a little bit lower than people might expect, because we have those income streams that most people would not be looking for. In due course, we will be raising capital. It's inevitable almost with companies of our nature. And we're currently, as you say, just over £60 million business, and the management team and the key shareholders of the group expect us for the company to grow substantially from here. And in due course, we may raise new equity, hopefully always at higher prices, to finance our business. Once we have an income-paying royalty stream, the pressure will be off us slightly, and that's something we're obviously continually looking for. But one thing we won't do is overpay for an asset just because we feel as if that's what the market is demanding at that time. The management team at Altus owns over 20% of the business. And this means there's a very strong alignment of interest between the shareholders and ourselves. We act as owners rather than purely managers. And to some extent, that might mean we may be conservative at times, but also for the long run, I think shareholders are very well aligned with the management team. And that's only good for the interests of both parties.
Just one final thing, COVID, we've got to talk on it. Shares up last year, right the way throughout the lockdowns and whatever else have you. How has it affected you at all? Not at all? Or how do you approach it?
Yeah, it had an impact on us. We from the UK office quite quickly in February of last year, we started to do remote working. Given the nature of the mining sector, it's always somewhat distance in terms of where you are from your colleagues. The transition to working from homes and wherever it may have been was seamless. There were no problems in that. Obviously, the disruption in flights really did hamper our ability to get our UK expats out to the site, and it wasn't safe to do so. From an operational standpoint, Africa, it was a question of once the outbreak started, was to ensure everyone got back to base safely into their homes and their families. And then once it became apparent that there were some good controls in place and it was safe to do so, we were able to mobilize our team around in Africa in order to undertake our exploration programs. And in fact, last year, or in the last quarter of last year, we gave our shareholders exposure to over 20,000 meters of drilling from our own properties and also our joint venture properties. I guess it could have gone a lot worse than that from a technical and operational standpoint. Pleased to advise we had no incidents in the group, but it was a little bit left field as it was for everyone. I think we coped with it very well. You have to treat, first and foremost is health and safety of your team and the communities in which you operate. We take that very seriously, but it went okay. And obviously the news flow that the company's put out in the last 6 months or more has been very positive, and we're hopeful that 2021 will be a lot better than last year from that standpoint.
Well, we keep our fingers crossed on that. And I look forward to speaking to you face-to-face as well, perhaps maybe sometime in 2021 in the studio. It'd be nice to catch up with you, Steve. Look, it's been a pleasure. Thanks indeed for your time. It's been fascinating finding out about the business. And doubtless we'll be back in touch with you when you get more of those deals under your belt. But in the meantime, thanks for joining us. That's the co-founder of Altus Strategies and current chief executive, Steven Poulton. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.